Hmm. Okay, so friends, pay attention. First of all, as per section 23, we are going to calculate what? As per section 23, we are going to calculate GAV. GAV means gross annual value. Okay, gross annual value. Now, gross annual value for let out property. For let out property, we'll start from municipal value, then fair rent, whichever is higher. Higher will compared with higher or standard rent, whichever is lower. Lower will be expected rent. Lower will be. Now, this expected rent will be compared with actual rent. Hello? Expected rent or actual rent. Both will be compared. And after comparison, we'll get GAV. Sometimes the unrealized rent is reduced from actual rent. But sometimes it can also be reduced from GAV. Sometimes it can also be reduced from GAV. Please pay attention. See. Now, in the calculation now, what is municipal value, what is fair rent, what is standard rent, everything, okay, is just a part of theory. We are not supposed to focus on the meanings of these things, okay, no? What is municipal value, what is fair rent and all. Otherwise, it will take ages to finish this exam-oriented batch. Intense batch will not over, it will be very intensified. Hello? So, wherever the meanings will be required, logics will be required, I will be definitely giving it to you. Don't worry about that, okay? These three figures will always be given in the question. Now, we are very, we have to know the meaning of what? Actual rent. We have to know the meaning of actual rent, because in our format, actual rent we have to calculate, and we have to, introduce the amount of actual rent in the solution in the format. So what is the meaning of actual rent? I told you, it is the rent for the period for which the property is. Rent for the period for which the property is, whether received or receivable. Whether received or receivable. So, for example, in my previous year, for us, the previous year is 24-25. For us, the previous year is 24-25. So, I will say that in previous year, 24-25, there's a lot of disturb, no? See, first of all, I will have to see that during this previous year, for how many months I am the owner of the property. I will have to first check whether I am the owner of the property or not. Yes or no? So during the previous year 24-25, I am the owner of the property. I am the owner of the property from 1st April 2024 to 31st March 2025. Can I say this is my ownership period? How many months? Entire year I am the owner of the property. Hello? So ownership is for how many months? Now, out of the 12 months of my ownership, I will let out the property. I will let out the property. Can I let out the property for full 12 months? Yes or no? And if I have let out the property for full 12 months of my ownership, can there be any vacancy? Is there any vacancy in the property? No. Because the property is let out throughout the period of my ownership. Okay. Now if there is no vacancy, property is let out for how many months? Whether you receive the rent of these 12 months or not will not make any difference. Whether you receive the rent of these 12 months or not will not make any difference. Actual rent will be for how many months? Because the let out period is 12 months. Yes or no? So to calculate the actual rent, always see what? Always see let out period. Always see. If you come to know that this is the let out period, for that let out period only calculate the amount of rent, and that rent will be treated as your actual rent. Everyone. Now actual rent has to be compared with which amount? Expected rent, no? Hello? So expected rent will also be calculated here. Tell me yes or no. Now tell me, expected rent will be for how many months? Expected rent will be for how many months? 12 months. Why? Why you are taking expected rent for 12 months? No. Expected rent will always be calculated based on ownership period. Based on? If the ownership is for, your expected rent will also be calculated for, meaning the amount of municipal value, take it for 12 months. Amount of fair rent, take it for 12 months. Whichever is higher. Then will be compared with standard rent. Standard rent also you will take for 12 months. Then only your expected rent will be for 12 months. Getting my point? Expected rent for ownership period. Expected rent for and actual rent for let out period. Yes or no? This is very simple. Everything is 12 months. Hello? Now tell me, out of my ownership of 12 months, can I let out the property only for 10 months? Can I let out the property for 10 months? So in that case there is a vacancy of actual rent will be for how many months? Actual rent will be for how many months? And expected rent will be for? Why 12 months? And why 10 months? Let out period. Did you understand this? Don't commit a mistake over here. See, in the entire chapter, what are your pain points? I am focusing on that only. Okay? Because other than these things, you never get any problem in what? House property chapter. House property chapter is easy. Very, very, very easy. But sometimes the students get stuck. And they get stuck in these kind of things. Okay? And if you have a command over all these things, no, house property head is not going to put you in trouble. Okay? 2 or 3 things which you are supposed to keep in mind. Okay? So one of them is this calculation which I am doing right now. Okay? So now tell me, here in one case there is no vacancy, and in one case there is a, see, if there is no vacancy, then can you see actual rent and expected rent are both for same period? Actual rent also for 12 months, expected rent also for, meaning both the amounts are for same period, no? If both the amounts are for same period, you can directly compare. You can, whichever is higher, whichever is, will be treated as your GAV. Will be treated as your GAV. Understanding or not? So now tell me one thing. If there is a vacancy, because of that actual rent is only for, and expected rent for? Now can you see actual rent only for 10 months, expected rent for 12 months. Can you directly compare both of them? Whichever is higher. The comparison will be absurd. Comparison will not lead you to a logical answer. Why? Because one amount is only for 10 months and another amount is for 12 months. This comparison will give you illogical results. Getting my point? So you cannot directly say that actual rent or expected rent, whichever is higher. Actual rent or expected rent, whichever is, you cannot do it. So in this case, what you are supposed to do? In the case of vacancy. What did I say? In the case of vacancy. How to determine the GAV? See, if no vacancy is there, If no vacancy is there, first case I am talking, yes or no? In that case, what you are supposed to do? You are supposed to take the expected rent, you are supposed to take the actual rent. Both are for how many months? 12 months, 12 months, whichever is higher. That higher amount will be treated as your GAV. Yes or no? Now, if there is vacancy, if vacancy is there in the second case, can you see? Now, in that case, how to determine the GAV? In that case, always check if even after vacancy, even after your actual rent, which was for how many months? It is still higher than expected, greater than or equal to expected rent or of 12 months. Expected rent is for 12 months and actual rent is only for, even if there is 2 months vacancy, even if there is, still my actual rent is higher than your expectation. Still my actual rent is higher than or equal to your expectation. If vacancy was not there, no, it was more than your expected rent, or it was even more than the existing amount. Getting my point? So am I trying to hide something from the government? I am trying to show the actual amount of actual rent. Yes or no? Which is more than your expectation. So the government says that, see, if the assessee is showing the actual rent, even after vacancy, the assessee is showing a higher amount of actual rent or an actual rent which is equal to our expectation, then consider this actual rent only as what? GAV. Did you understand the first case? Hello, sir. Now see, if vacancy is there, and even if vacancy is there, actual rent is higher than or equal to expected rent, then actual rent will be treated as, but it is not the case which is possible every time, no? Hello? Is it the case which is possible every time? Sometimes the actual rent can be less also. Sometimes the actual rent can be less than expected rent. In that case, what will you do? Come on, tell me. If your actual rent is lower than actual rent for how many months? 10 months. Expected rent for how many months? Now this 10 months amount is lower than 12 months amount. Has to be. Why? Because there was 2 months vacancy. So if it will be asked to the assessee, that assessee, why are you showing your actual rent less than the expected rent? So what the assessee will say? Because of 2 months vacancy, my actual rent is less. Yes or no? So will the assessing officer believe the assessee, or he will verify? He will have to check also whether the actual rent is lower than expected rent because of vacancy only or not. Yes or no? So what he will do in this case? In this case, what the assessing officer will do? He will add the vacancy rent. He will add in the amount of, now this is also for 12 months. Hello? Now this is also for your 10 months actual rent we have taken. And if you would have let out the property for vacancy period also, you would have received some rent, no? So vacancy rent also is added. So now tell me, actual rent for 10 months and vacancy period rent for 2 months is added. Now this amount is for how many months? Now this will be compared with expected rent. Now after adding the vacancy rent, what did I say? After adding the vacancy rent, if the total is, if the greater than or equal to, that means vacancy was the reason. That means vacancy was the reason because of which your actual rent was lower. Yes or no? In that case also, the actual actual rent will be treated as your, don't take the total amount, AR plus VR, it is only for the sake of comparison. Don't take this total amount as your GAV. GAV will either be actual rent or it will be expected rent. No other amount can be treated as GAV. Understanding? So after adding the vacancy rent, what did I say? After adding the vacancy rent, if the total is greater than or equal to, then also actual rent will be treated as GAV. Understanding or not? But what if in the actual rent you added vacancy rent, now this total is still less than expected rent, meaning that vacancy is not the reason for your actual rent to be less than expected rent. The reason is something else. Either you are hiding something from us or you are a fool. That if your property can earn this much amount of rent and still you are earning less. Getting my point? So in that case, if this total is less than the expected rent, even after adding the vacancy rent, the total is less than expected rent. In this case, your actual rent will be ignored and the expected rent will become your GAV. Got it, sir? Hello? So now tell me. Now, if I say that the ownership, now these two cases you understood, no? Everyone. Now I am putting you in some trouble, huh? You are going to give me the answers, okay? Now ownership is only for 9 months. Possible? How come 9 months ownership will be there? How come 9 months ownership? Tell me. Because from 1st April 2024 to 31st March 2025, no. You are the owner of the property from 1st July 2024. This is the first year in which you have acquired the property. And you became the owner on 1st July. So ownership is from? So from 1st July only your ownership will start. 1st July to? So can I say the ownership is only for? Ownership is only for 9 months. So 9 months ownership, yes or no? 9 months. Out of this 9 months, property is let out. Can I say the property can be let out for full 9 months? Yes or no? Will there be any vacancy? No. Tell me, actual rent for how many months? 9 months. Expected rent for how many months? Expected rent also for 9 months. Yes or no? For actual rent, what did you check? Actual rent, did you check let out period? And for expected rent, what did you check? Ownership period. Everyone understood, no? Now out of the 9 months ownership, you actually let out the property for 7 months. Not 7 months exactly, let's say 6 months. You're letting out the property only for? Now if you have let out the property for 6 months, can I say there is a vacancy of? Yes or no? Actual rent for how many months? Expected rent for how many months? Understanding? These things you will have to identify from the question. Question will speak about all these things. You will have to identify these things from the question. Yes or no? So now tell me. Now here, what will you do? In the first case, come on, tell me first case. First case, is there any vacancy? Vacancy or no vacancy? Actual rent, expected rent, both for 9 months. What will you do? Compare it directly. Whichever is will become the. Now in the second case, can I say there is a vacancy of 3 months? If there is a vacancy of? That means actual rent and expected rent is not for same period. Actual rent is for less period, expected rent is for a higher period. Yes or no? In this case, can you do whichever is higher? What will you do? No. Don't do it directly. Even if 3 months vacancy is there, even if actual rent is greater than or equal to, even if there is a vacancy. In that case, actual rent will be taken as, understanding or not? But if actual rent is less than expected rent, then what will you do? Then you will add the vacancy rent for the purpose of comparison. Yes or no? Now what will you do? You will take the actual rent and in that you will add vacancy rent. Now this total you will have to compare with expected rent. Now if this total is greater than or equal to, that means in this case also actual rent will become your, yes or no? What if actual rent plus vacancy rent, this total is still less than? In this case your actual rent will be ignored and expected rent will become your. Understood? Every time you are supposed to do this. Okay, no? Now here, expected rent for how many months you have taken? 9 months was your. So if you come to know that the property is owned by the assessee for 9 months, so expected rent has to be calculated for municipal value 9 months, fair rent, standard rent, then only your expected rent will be for 9 months. Getting my point? Actual rent may be for 9 months or less than 9 months. And if it is for 9 months, there is no vacancy. If there is no vacancy, whichever is higher. And if there is vacancy, if the actual rent is for less period as compared to ownership period, there is a vacancy, and in the case of vacancy you are supposed to do the calculation like this. Everyone understood this or not? Yes or no? Sure? Should I move ahead? Okay. So this was your entire calculation. See the notes and etc. This notes you will get not today. In this notes, everything which I am speaking in front of you, you will see that in the notes. Today itself, read the entire notes so that you don't have to wait for, time. Entire notes you have studied, the entire lecture will be over. Entire chapter will be in your control from today itself. Okay, don't delay this thing. Getting my point? Okay. Now see, let's come to the format again. Read the format, everyone. First, municipal value. Then second, then compared with, then that will be expected rent. Expected rent compared with actual rent. Now can you see here, from actual rent I am reducing unrealized rent here. Hello? This unrealized rent you can reduce it from here also. If you don't want to reduce it from here, after calculating GAV from here also you can reduce. Yes or no? What is unrealized rent? First of all, you tell me. Have you heard about unrealized rent? What is unrealized rent? Tell me. Anyone? Come on, fast. Which is not paid or payable? Not paid by the tenant. Have you heard about bad debts? It is nothing but your bad debts. Tenant has stayed in your premises. Hello? For how many months? 12 months. So he should be giving you the rent for 12 months. 12 months rent became due. 12 months rent became, means it became receivable. Out of that 12 months, you have already received the rent for 11 months and 1 month rent is still receivable. 1 month rent is still receivable. Now the tenant does not pay you that rent. That rent becomes bad debt. Tenant runs away. Then the rent which became due, which you could not recover, the amount of actual rent which became due, which you could not recover. Hello? That is nothing but unrealized rent. Understanding? Hello, sir? So now, if I give you example, okay, if I give you example, see, ownership ownership was for how many months? Now, out of 12 months ownership, out of the property was let out. Property was for, was there any vacancy? No vacancy. Meaning the actual rent for how many months? 12 months. And expected rent also for? Done, no? Here, if there is no vacancy, what are we going to do? Directly compare expected rent and actual rent, whichever is. But when you checked your actual rent, no? When you checked your actual rent is the rent for the let out period. Let out period was 12 months. So out of these 12 months, no? Out of these 12 months, 11 months rent was received. 11 months rent was, and 1 month rent was receivable. See, when you do sales, no, some sales are cash sales, some sales are credit sales. Out of cash sales, there is no bad debt. Bad debt is always from the amount which is receivable. Hello? So it is as good as your cash sales and credit sales only, no? Cash sales means amount which you have already received. So here, see, no, actual rent already received. There cannot be any bad debt out of that. Bad debt can be only from the rent which is receivable. So how many months rent was receivable? How many months rent was receivable? So 1 month rent could not be received. Could not be. It became bad debt. So this is unrealized rent. This is, can I say unrealized rent is nothing but that part of actual rent which you could not recover. That part of your actual rent which you could not, meaning unrealized rent was a part of your actual rent only. But since you cannot recover, the government says eliminate this amount from your actual rent. Eliminate this amount from your. Hence in this format, if you will see, no, hence you will see out of actual rent, unrealized rent is reduced. After reducing the unrealized rent, whatever actual rent remains, that actual rent is now the rent for your let out period. Hello sir. That actual rent is now the rent for your let out period. After eliminating what? Unrealized rent. Getting my point? So for example, if I say that the rent per month was 20,000. Rent per month was. So tell me, actual rent will be for 12 months into. So that will be 2,40,000. Yes or no? Can I say in this 2,40,000, this 2,20,000 is also there? Hello? And this 1 month rent, 20,000. Both these amounts are there in this 2,40,000. Yes or no? Now, if you have not received some part of this rent, what they are saying? Reduce that. So, how much amount? 2,20,000. This will now become your, for how many months? Actual rent for 12 months will not be 2,40,000. It will now be. Getting my point? Now, have you reduced your unrealized rent from actual rent? Now this actual rent will now be compared with expected rent. Expected rent for how many months? Actual rent for how many months? And actual rent for 12 months was 2,40,000, but instead of 2,40,000, now how much you are taking? You have eliminated the unrealized rent out of this? Yes or no? And what if your expected rent was 2,30,000? Possible or not? Hello? Possible or not? Is there any vacancy? Is there any vacancy? So expected rent, actual rent, whichever is, what will be your GAV? What will be your GAV? Don't you think this is completely bullshit and illogical? Because bloody you are getting only 2 lakh 20 and you are paying tax on how much? Actually speaking, the bad debt happened for 20,000. You are not getting the benefit of entire 20,000 bad debt. Please check. If this amount would not have been, if this amount of 20,000 was not reduced from this, so your actual rent would have been how much? It would have been 2 lakh 40. 2 lakh 40 or 2 lakh 30? 2 lakh 40 would have been your GAV. Hello, sir. So if 2 lakh 40 would have been there and I am not receiving 20,000 out of 2 lakh 40, I should be paying tax only on 2 lakh 20, no? Hello? But what happened? Since I reduced the amount of unrealized rent from the actual rent and as a result of that the actual rent is going below the amount of, and since there was no vacancy, I will not pay tax on this amount, I will have to pay tax on this amount. The entire amount of bad debt, I will not get the benefit of the entire amount of bad debt. Getting my point? So see, theoretically, what did I say? Theoretically, you are supposed to reduce unrealized rent from actual rent. If you are doing this, so your actual rent will not be 2 lakh 40, in that case it will be, and your GAV will also be, this is theoretically correct. In the examination if you will write this, you will get full marks. But logically, this is not good. Getting my point? Hello? So what will we do? Instead of reducing unrealized rent, instead of from the actual rent, we'll reduce it after calculating what? Now tell me, if actual rent is the rent for let out period, that is 2 lakh 40, and for 12 months the expected rent is whichever is, what will be my GAV? Now from this, if you will reduce 20, you will get a final GAV of. Now tell me, would you like to pay tax on 2 lakh 20 or you like to pay tax on 230? Getting the benefit of entire 20,000 bad debt is better, or getting the benefit of only 10,000 is better? Yes or no? So this is done. This is done in the income tax returns. When you file your income tax returns, no? So in the income tax return, this is followed. Getting my point? And for this, you will get the full marks in the exam also. And this appears to be more logical also. Getting my point? So if you will do this, you will get full marks. Don't worry about that. Okay? So both the options are correct. Both the options are correct. Both will give you full marks, but one is more logical, another one is illogical. So it is always advisable to follow logical. But in your solution, what you will write? In the above solution, we have reduced the amount of unrealized rent from the amount of GAV. Alternatively, what will you write? Alternatively, the amount of unrealized rent could have been reduced from actual rent also. The treatment given in the solution is as per, the treatment which we have given in the solution is as per the treatment given in income tax returns. Alternatively, it could have been reduced from actual rent also. Can you write down this small note in your answer? Yes, that will be sufficient. Will you remember? Sure, sir. So now the first type of property. What type of property? First type of property. What was that property? Come on, tell me. Come on, tell me. Let out property. The value of let out property is? Value of let out property is? But how to calculate this? How to calculate this? Municipal value, fair rent. Whichever is compared with, whichever is lower amount will become expected rent compared with expected rent, actual rent. Comparison will give me. Comparison will give me. Comparison will be done directly if there is no vacancy. Expected rent, actual rent, whichever is. Expected rent, actual rent, whichever is. If there is No vacancy. And if there is vacancy, if there is vacancy, we cannot directly compare. We'll have to add the vacancy rent also. But we'll add vacancy rent only if actual rent is less than. If even after vacancy, the actual rent is equal to or higher than, actual rent is equal to or higher than, even if there is a vacancy, then take the actual rent only as your. But if the actual rent is less than expected rent, then we will add the vacancy rent. Actual rent plus vacancy rent. If this total is greater than or equal to expected rent, still your actual rent will become. Yes or no? And if the total actual rent plus vacancy rent, if this total is still less than, actual rent was lower. After adding vacancy rent, still the total is less than, then your actual rent will be ignored and expected rent will be taken as your. Understanding or not? All these things, what is municipal value, what is fair rent, then what is standard rent, what is expected rent, what is actual rent, everything is given here. Okay, no? Now what is the meaning of unrealized rent? Did I tell you unrealized rent? Everyone? Everyone? It is that part of the which has become but could not be recovered from the, also known as bad debt. Okay, no? It is reduced from while computing the. Alternatively, as per the treatment given in the ITRs, it can also be reduced from. However, the amount of unrealized rent can be reduced only if all the conditions of Rule 4 are satisfied. Now, there are 4 conditions. Condition A, Condition B, Condition C, and if these 4 conditions are fulfilled, only then the unrealized rent can be adjusted while calculating your GAV, whether from actual rent or from GAV. Wherever you want to adjust, you can adjust it while calculating your GAV only if these 4 conditions are fulfilled, satisfied. Yes or no? First condition, tenancy must be bona fide. Second condition, defaulting tenant has vacated the property or legal steps have been taken to compel him to vacate the property. Either the tenant who has not given you unrealized rent, either he has vacated your property or you have taken the legal steps to compel him to vacate your property. The defaulting tenant is not occupying any other property of the assessee. He should not be occupying other property of the same assessee. Yes or no? And the last one, assessee has taken all the legal steps for the recovery of the unrealized rent. However, if the assessee has not taken the legal steps for the recovery of the unrealized rent, then he must satisfy the assessing officer that taking such legal steps shall be useless. See, these 4 conditions, no, you'll have to just remember. That's it. No need to get into details. Okay, why this condition, why this condition. This is just a theoretical part. In the examination, they will tell you whether the conditions of Rule 4 are satisfied or not. If in the exam they are giving that these conditions are what? Satisfied, only then adjust the unrealized rent while calculating your GAV. If they are saying that these 4 conditions are not satisfied, then no need to adjust the unrealized rent. You will write a note. Since the conditions of Rule 4 are not satisfied, hence we have not adjusted the unrealized rent. Getting my point, everyone? So this was your unrealized rent. Now see, wait. Now 23(1) is done. We know that how to calculate the GAV. Okay. Now 23(2) talks about which properties? Self-occupied property. I told you in the last lecture that which type of properties will be treated as self-occupied property. Yes or no? Which type of properties will be treated as self-occupied property? Number 1, throughout the year used for residence by the assessee or his family members. Throughout the year kept reserved. Throughout the year kept reserved, that whenever the assessee wants, he can use it for residence. So he has kept it reserved, but not taking any monetary benefit. Getting my point? Now, throughout the year, not self-occupied. Self-occupied for only the part of the year. But for the balance part of the year could not be occupied because the assessee is shifting to another place because of his employment, business, profession, etc. Yes or no? So the property was self-occupied only for 7 months. Property was occupied only for residential use. And for the balance 5 months of the previous year, the property could not be used for residence. Why? Because the assessee had to shift to another place. For what? Employment, business, profession, etc. Yes or no? Now in that particular case, what will happen? For those 5 months, if the property could not be used, could not be self-occupied, then for those 5 months, the assessee should not be taking any economic or financial benefit out of the property. Yes or no? That means for this entire year, the property is not self-occupied. For part of the year, the property remains idle, and for that part of the year also, the assessee is not deriving any economic or financial benefit. Yes or no? Only in these 3 cases, if the property falls, then only you will say that the property is SOP. Then only you will say that the property is. Now if the property is SOP, so for SOP, section 23(2) is there. Section which says that the annual value of self-occupied property will be, annual value of the self-occupied property is, and it is exempt for all the SOPs or any 2 SOPs. At the option of their annual value will be exempt, will be taken as nil, and this exemption is available only to, yes or no? Because only individuals and HUF can use the property for residential use, no? Hello? So, if you are an individual, if you are an HUF, you are having multiple SOPs. You are having, out of those SOPs, for any 2 SOPs, you can claim the exemption available under section. Take the GAV as nil. Take the GAV as, meaning municipal value, fair rent, standard rent, etc. for this property will be of any use or will be of no use. Ignore these amounts, because even if you take these amounts and calculate the annual value, at the end of the day, annual value has to be exempt, has to be taken as nil. So why are you considering these amounts? Ignore all these amounts. Yes or no? Directly start from GAV. Directly start the solution from GAV. GAV will be taken as nil for 1 SOP, for 2 SOP. For the second SOP also the GAV has to be taken as nil. But which 2 SOPs you will exempt? Definitely the SOPs whose rent earning capacity, whose annual value was higher. Yes or no? For those 2 properties you will claim exemption, and the remaining SOPs, which you are not claiming exempt under 23(2) shall be treated as deemed to be let out properties, and their GAV will be as per section 23, as per section. Now in section 23(4) they are saying that 23(4) covers, 23(4) covers which properties? SOPs only are covered in 23(4), but these are those SOPs whose annual value you could not get exempted under section which? Remaining SOPs you will bring under 23(4). Now 23(4) says that for deemed to be let out property, their annual value will be exempt or will not be exempt? Will not be exempt. Their annual value will be taxable. And how to calculate the taxable annual value for a DLOP? In exactly the same manner in which it is done for let out properties. Do you know let out properties? First you will take, then you will take, then higher amount, higher of these 2, yes or no, will be compared with whichever is lower amount will be treated as expected rent. Now if bloody you will take this amount of actual rent, you are gone. Gone. Why? Because actual rent will always come in the case of let out property. Is it your let out property or it is assumed to be let out? By assuming that the property is let out, will you get any actual rent? So there will be no actual rent, it will be not applicable. Yes or no? Hello sir? So if there is no actual rent, it is not applicable. In the case of deemed to be let out properties, can I say whatever expected rent will be there, that only will be treated as your GAV. Hello? So the calculation is comparatively more simple as compared to LOP, because in LOP you will have actual rent also, you will have vacancy also, you will have unrealized rent also. Yes or no? All those things will not be here. Why? Because it is not actually let out property, it is deemed to be let out property. Actual rent will not be applicable. So whatever expected rent you have calculated, that entire expected rent will be treated as your GAV. Did you understand the calculation? Easy, no? Now everything will be given in the question. You just have to remember what you are supposed to do. Pick up these amounts from the question and put it in the format. You are going to get the answers. Easy? Sure, sir? Now, see, partly let out and partly self-occupied property. Now, right now, what we are doing, see, under this chapter, you are supposed to calculate the taxable income of every property which you have brought under this head. Every property which you have brought under this, for every property you will have to first determine the annual value. Hello, as per section. So we are first learning that for different properties, how to determine this. So for let out property, how to determine. For self-occupied property, this will directly be taken as nil for 2 SOPs. For deemed to be let out property, how to determine this GAV? Yes or no? So we are at the first step, that how to determine this gross annual value. So for different types of properties, we are learning that how to determine the GAV. And once we are through with GAV calculations, then we'll discuss municipal tax, then we'll discuss standard deduction, then we'll discuss, that's it. The chapter will be over. 1 or 2 miscellaneous things are there, that also I will have to discuss. The chapter will be over. Easy or not? Okay, so now tell me, GAV calculation for let out property. Come on, participate. GAV calculation for let out property. Municipal value, fair rent, whichever is compared with standard rent compared with, whichever is higher amount compared with standard rent. Higher amount of standard rent, whichever is lower amount is expected rent compared with expected rent. Actual rent comparison will give me GAV. From this GAV I will reduce unrealized rent if any. Alternatively it can be reduced from actual rent also. Okay, now final GAV is there. And this entire calculation, whatever important things are there, we have already discussed. What thing is important? Calculation of actual rent, reduction of unrealized rent, and determining the GAV. This is important. Focus on this. Yes or no? Now, next one, 23(2). 2 SOPs. 2 at the option of the annual value is GAV will be taken as nil. No need to do all such calculations. Yes or no? And what if other SOPs are also there? Other SOPs are there. Deemed to be let out. Now, if you have one SOP, GAV of this one SOP will be taken as, there will be no DLOPs. Hello sir. If you have 2 SOPs, take the exemption for 2 SOPs, there will be no DLOPs. If you are having more than 2 SOPs, take the exemption for any 2 SOPs and the remaining SOPs will be DLOP. Now for DLOP, how the calculation will be done? You will take municipal value, compare it with whichever is, compare with standard rent or higher amount, whichever is, that lower amount will be expected rent. Will there be any actual rent? No actual rent. Directly the expected rent will become. Done, sir? Now we are talking about partly let out, Partly self-occupied. Based on. But wait, before that we'll discuss based on. Now what is based on time? See, your previous year is 24, 25. Don't focus on these dates. Don't focus on these dates. These dates I have updated for previous year 25, 26. For us, the due date, for us, the previous year is, for us the previous year is. So this is 1st April 2024. This is 31st March 2025. Yes or no? Now, in my previous year, if the property is let out for, and if it is self-occupied for, can I say part of the year property is self-occupied? Part of the year property is let out. Now this property in this year will have only one status. Will have only, because in a year a property cannot have multiple statuses. For one previous year, property will always get one status. Now to this property you cannot give the status, double status of LOP, SOP both. Getting my point? You will have to choose that whether I should call this property SOP, then for this year the status will be SOP. Or should I call this property LOP? Now tell me, what will you call? SOP or LOP? Why? Because sir, for 9 months, for majority of the period, the property is let out. So I will take LOP. What if 9 months it was SOP and 3 months it was LOP? Then also the status will be LOP only. Why LOP? Simple. The moment you start taking the benefit out of the property, the moment you start exploiting the rent earning capacity of the property and start earning the rent, the property becomes LOP, let out property. And do you remember 3 types of properties? I told that only these 3 types of properties can be treated as SOP. Throughout the year kept reserved, or throughout the year used for residence, or part of the year used for residence, balance part kept idle and no economic benefit is taken. Only in these 3 cases the property will be treated as SOP. This property does not fall in any of these 3 cases. Bloody, you are exploiting the rent earning capacity of the property to earn the rental income of the property. This property cannot have any status other than LOP. It will be also treated as your LOP. This is given in 23(3). If the property is let out for the part of the year and self-occupied for the part of the year, meaning partly let out, partly self-occupied, based on time, then this property will also be treated as LOP. Only single status can be given. Double status is not possible. So if single status is given, what status you will give? And the GAV will be, and it will be computed in the same manner in which we calculate the GAV of let out property as shown in section 23(1). Getting my point? Now there will be some problem over here. What problem you will face, I'll tell you that. Okay, no? Did you understand this much? Everyone? Sure, no? Now if you understood this much, tell me, I have made 2 cases for you. First case and second case. In the first case, what is happening? 9 months the property is, 3 months the property is. What status you will give? Let out property. The status given will be let out property. Please give the answers, whatever I am asking. Now if the property is treated as let out property, I will have to calculate the GAV. First I will take, then whichever is compared with, I will get expected rent. Expected rent for how many months? Check the first case. Expected rent for how many months? 12 months or 9 months? Why 12 months? You will always calculate the expected rent for ownership period. For how many months you are owning the property? So expected rent definitely for 12 months. Understood, sir? Everyone? So now expected rent for 12 months you have calculated. Municipal value, fair rent and standard rent. These three amounts you will take for 12 months. Now tell me, expected rent has to be compared with? Do you have actual rent in this case? How many months? Meaning the property is let out for? Let out for? So 9 months rent will be? 9 months rent will be? 9 months rent will be? Now tell me, expected rent for how many months? Actual rent for how many months? Yes or no? Was there any vacancy in the property? No? Or yes? No vacancy. And if there is no vacancy, what we do? Expected rent, actual rent, whichever is higher. Sir, why are you saying that there is no vacancy? Bloody for 9 months, someone else is occupying, property is occupied. And for these 3 months, you are occupying. The property is not under lock and key. Property is occupied. Yes or no? So is there any vacancy? So if there is no vacancy, what do we do? We compare the actual rent and expected rent directly, whichever is. Even if this is for 9 months and expected rent will be for, still the direct comparison will happen. Yes or no? Everyone. Now let's come to the second case. Second case. Property was let out for? Till 30th November. Till 30th November the property was let out. Then for the entire December month the property remained vacant. Entire December month the property remained. And from January, this is 3 months and 8 months. Some mistake. This 8 months is okay, no? December, Jan, Feb, March. This will be 3 months. This will be 3 months. Jan, Feb and March. Right, no? Okay. So tell me, for these 3 months the property is self-occupied. 1 month the property is vacant. And 8 months the let-out period. See, whatever I am writing here, no, trust me on this. If you read the question, no, in that question only, if you will understand, you will be absolutely be able to identify that the question wants to say the same thing. My explanations are nothing but the questions only, which you get in the exam. If you read the question, if you will understand the question, no, read the question, understand it, and try to correlate the question with something which we have studied. Understanding what I am trying to tell you? Merely sitting in the classroom listening to me will not help you out. Whenever you will find out a question, that time in the question you are supposed to remember at that time while solving the question that something like this we did in the class or not. If yes, then try to recall that whatever the question wants to say, whether that thing we have seen in any concept, try to recollect that concept. You will understand the question will become very easy for you. Because the moment you will recollect the entire concept, no, you will come to know that, okay, sir had told to do this, sir had told to do this, we are supposed to do this, this and this for this concept. You are supposed to exactly do the same thing in that question also. But for that, it is very important for you to identify that what is given in the question and it relates to which concept which you have already studied. Yes or no? This way the studies happen. Solving 5,000 questions with you, but if you don't develop this attitude, no, it is not going to help you out. Any number of questions you will solve, you will never get confidence because you yourself are not able to identify the concept from which the question is being asked. Getting my point? Hello, sir. So now tell me, in this case, my first question, expected rent for how many months? 12 months. Why? Ownership is for the full year, sir. So expected rent will be for 12 months. Municipal value, fair rent, standard rent for 12 months. Expected rent you calculate. Now tell me, actual rent for? Why 8 months? Because let out period is 8 months. That's it. Now tell me, can you directly compare expected rent and actual rent? Why? There is 1 month. Even if the property is vacant for, still your actual rent can be higher than or equal to expected rent? Yes or no? In that case, take the actual rent as your GAV. Hello, sir. Everyone. So now tell me one more thing, one simple thing I'm asking you. If the actual rent was less than expected rent, possible, not possible, then what will you do? Vacancy rent for 4 months or only 1 month? Because for 4 months the property is not vacant. Property is vacant only for? So add 1 month vacancy rent. So actual rent 8 months. 1 month vacancy rent. Both these amounts you will add. Now you will check the total. If that total is greater than or equal to expected rent, in that case also actual rent will be treated as, understanding or not? But wait. Actual rent of 8 months plus vacancy rent of 1 month, total is still less than expected rent. Then your actual rent will be ignored and expected rent for 12 months, that will be treated as your GAV. Will you remember this? Hello, sir. So this was partly let out, partly self-occupied based on time. You are supposed to solve the answers like this. Okay. Now we'll go to partly let out, partly self-occupied based on area. Based on area means what? Ground floor, first floor of the same property. Can you have one property having ground floor also and first floor also? Ground floor let out, first floor self-occupied. Ground floor let out, first floor possible, not possible? Can you have a property having 3 rooms? Can you have single property having 3 rooms? 1 room self-occupied, 2 rooms let out. Possible. So what are you doing? Are you keeping the entire property as self-occupied? Are you keeping the entire property self-occupied? No. Part of the property is self-occupied and the part of the property is let out. Yes or no? Are you keeping the entire property as let out? Are you keeping the entire property as let out? No. Part of the property is let out and part of the property is. So now tell me, for this entire property, for this, if the annual value is calculated and that annual value is taxable in your hands, will you like it? Why? Because if the entire property's annual value is charged to tax, that means the annual value of that portion is also getting calculated and taxed in your hands, which is self-occupied. Will you like it? Now tell me, can you claim the exemption of the entire property's annual value? Can you claim the exemption for the entire property? If you do it, the government will not like it. By doing this, you are claiming the exemption for that portion also, which you have actually let out. Getting my point? So in this case, where one property, part of it is let out and part of it is, this property will get double status. This property will get, actually it is not double status, actually the part which is self-occupied will be treated as a separate property. The part which is let out will be treated as a separate property. Yes or no? Even if it is one property only. But since one property entirely is not self-occupied, one property entirely is not let out, so practically it will become difficult and it will not sound good if the entire annual value is taxed or entire annual value will be exempt. It will not look good. Yes or no? So what is to be done here? What is the most logical thing to do? Treat each part as a separate property. Treat each part as a, for example, ground floor was let out. So treat the ground floor separately as a separate property, treat it as a LOP. And first floor was self-occupied, yes or no? So treat the first floor as a separate property and calculate the annual value for the SOP separately. Calculate the annual value for LOP separately. Both the parts will be divided. So the entire property is divided into two parts. Entire property is divided into ground floor, and ground floor will be treated as a separate property, LOP, and first floor will be treated as a separate property, SOP. Understanding? 3 rooms were there. How many rooms? 3 rooms. 1 room self-occupied. The remaining 2 rooms let out. So what you will do? Entire property you will calculate together. No. One part which was self-occupied, that 1 room, calculate the annual value separately. 2 rooms which were let out, treat these 2 rooms separately as your let out property. Can you do it? Very easy. For LOP, what you do? 23(1). Hello? So for ground floor, in my example I have taken ground floor and, okay. So this is a single property only, but having 2 parts. One part which was self-occupied, one part which was, and one part which was. You just calculate the annual value of this part. Just calculate the annual value of this part as LOP as per 23(1). And can you calculate the annual value of this part? No. It will be taken as nil because it is, wait, this is the only SOP you have. This part is the only SOP you have, exempt. This SOP and one more SOP you have, both are exempt, yes or no? This SOP and 2 more SOPs you are having. Now you will have to decide that out of these 3, this one and another 2. Hello? This one and another 2. Total 3. Out of these 3, which you want to claim exempt. For example, you are claiming the other 2 as exempt. Other 2 SOPs as, then this SOP portion will be treated as DLOP. Got it, sir? Easy, no? Now tell me, if you are giving double status, double meaning you are going to calculate the income of the property in parts. Some part of the property, each part will be treated as a separate property. Now pay attention, the let out portion shall be treated as a separate property, LOP. Self-occupied portion shall be treated as a separate property. That is, either it will be treated as SOP or it may also be treated as DLOP. If other 2 SOPs are there, then other 2 SOPs will be exempt and this self-occupied portion will be treated as DLOP. Okay. Now the GAV of the let out portion will be taxable and it will be calculated in the same manner in which you calculate under 23(1). And GAV of the self-occupied portion, can be exempt also and it can be taxable also if it is considered as DLOP. Yes or no? Hello. So now please pay attention, this note is very important. Very important. Now see, do you have this property? Full property. Hello? So, municipal value, fair rent, standard rent for the full property is given. For the entire property, the municipal value, fair rent or standard rent is given. If you take this amount and calculate the annual value, don't you think that the annual value will be for the full property? Are you going to tax the annual value of the full property or only this portion? Yes or no? So what you are supposed to do? you are supposed to divide these amounts. If the municipal value is given for the full property, fair rent, standard rent is given for the full property, and if you will take those amounts to calculate the annual value, so annual value will be calculated for the full property. Are you going to calculate the annual value for the full property and tax the annual value of the full property, or only for the let out portion you are going to do it? So you will have to now find out that out of the municipal value, fair rent, standard rent, how much amount relates to let out portion. Yes or no? So you'll have to divide the municipal value, fair rent, standard rent. You'll have to divide this into let out portion and self-occupied portion. In what ratio you will divide? Area ratio. Simple. Why? Because if the municipal value, fair rent or standard rent, it is given for the full property having an area of 1000 square feet, out of that 500 square feet is, so how much municipal value, fair rent, standard rent should be for that 500 square feet area which is let out? So you'll have to divide it in the ratio of area which is let out and self-occupied. Yes or no? But you are going to do it only if these figures are given for entire property. If it is given for entire property, then divide these amounts into let out portion and self-occupied portion. Yes or no? Very easy, logical. Hello? So tell me, municipal value, fair rent, standard rent. If it is given for entire property, and if entire property is let out and self-occupied, then the municipal value, fair rent, standard rent has to be between the let out and self-occupied portion on the basis of area let out, and on the basis of this ratio you are supposed to apportion these amounts. Yes or no? Can I say municipal taxes also you can pay for the property for which you get the deduction? Now what if the municipal tax is also given for full property? What if the municipal tax is also given for? So that also you are supposed to do proportionately. Municipal tax for let out portion will be allowed as a deduction while calculating the annual value of let out portion, and municipal value of self-occupied portion will be ignored. Why? Because SOP, the annual value, is exempt. So even if you pay any municipal tax for SOP, you don't get any deduction for that. Getting my point? So if the municipal tax is given for the entire property, what you will do? You will do the proportion. You will bifurcate the municipal tax also in proportion. Please sit down straight, huh? I'm telling you, nobody is going to sleep. Nobody is going to sleep. Is it interesting or you're getting bored? Interesting, no? You're learning new things? Sure? Now, if you'll not pay attention, no, in whatever I am speaking, 2-3 questions which I am going to solve for this, no, you'll not understand those questions also. What will you do in that case? That time you were sleeping, at that time when I was explaining. You want me to dance here? You want me to dance here to entertain you? You are here to see my dance, or you are here to study? Come on. Yes. So, did you understand this part? Everyone. Now, sometimes what can happen? The housing loan is taken for the entire property. Housing loan can also be taken for the entire property. If the housing loan is taken for entire property, can I say interest on that housing loan will be for entire property? Out of that interest, some interest will relate to LOP and some interest will relate to yes or no? Then interest for let out property will be separately claimed as a deduction from LOP, and interest for self-occupied portion will be separately allowed from self-occupied portion. Yes or no? Even if self-occupied property, even if self-occupied property is what? Annual value is nil. Still you get deduction for interest. That I'm going to discuss in some time. Don't worry about that. But first of all, did you understand this? Now, sir has told you what to do. Sir has told you in the class today itself that municipal value, fair and standard rent, municipal taxes and interest on housing loan. If given for, then only the apportionment will happen. Then only divide these amounts. But the examiner sometimes becomes smart. Examiner will tell you municipal value, fair and standard rent, municipal taxes or interest on housing loan only for LOP. Meaning that now apportionment also you are not supposed to do. The apportionment has already been done by the examiner. Whatever which is related to let out portion, he has himself calculated and given it to you in the question. Now if you will not read it properly and if you will apportion that also, your answer will be wrong. You have to read the question properly, I am telling you. I am saying that if these figures are given for, only then the apportionment will happen between LOP and DLOP in the ratio of area. But if these figures are given for each portion separately, then take those separate amount and calculate the incomes for different portions separately. Getting my point? No need to do any apportionments. This was partly let out, partly self-occupied, based on understanding. Now tell me, how many types of property? LOP we have done, SOP we have done, partly LOP, partly SOP based on time, 23(3) we have done. But along with that, we have also seen one more concept, partly LOP, partly SOP based on area. So in that, based on area, 23(1) as well as 23(2), both are applicable, yes or no? Yes, both the parts are treated as separate properties. Sometimes the SOP portion, you get the exemption if it is the only SOP or it is the second SOP, yes or no? But sometimes the SOP portion can also be treated as DLOP if you already have other two SOPs for which you are claiming the exemption. Then this SOP portion will not be exempt, it will be treated as DLOP. Understanding? Okay. Now see, now the last part, property held as? Property held as? Can you hold a property as stock in trade? Okay. When it is possible, tell me. In the case of real estate business, so for example, you are a builder, you are a construction, you are in the business of constructing the properties, okay, no? Or you are a property dealer. One very simple thing I am going to tell you. See, even if you hold the property as stock in trade, even if you hold the property as, your business is not to give these properties on rent. What is your business? Either to buy the properties and sell, or to construct the property and sell. So buying and selling or constructing and selling, this is your business. So in your business, for example, for me, my business is to buy and sell these bottles, water bottles. So in my business, this is my stock in trade. Hello? My business can be to buy and sell these markers. So in my business, this marker is my stock in trade. But somebody having a business of buying and selling the properties, constructing and selling the, so for those businessmen, their properties are their stock in trade, yes or no? Now tell me, if you are in that business and you are having some properties and those properties you are giving on rent, are you in the business of giving the properties on rent? Or you are in the business of buying and selling, constructing and selling? So after selling the property, whatever income you are going to get, that income will be taxable under the head of PGBP. After selling the property, which was your stock in trade, after selling that property, whatever income you will get, that is your PGBP. Bloody, your business is to give the property on rent. No. Till the time the property remains in your stock, till the time you are not selling it, your intention was to exploit the rent earning capacity. And because of that intention only, you are giving the property on rent. Your business is not to earn this rental income. Getting my point? So if you actually let out, the property is held as. If you actually let out, the property is held as. Those properties will be treated as your LOP only. Those properties will be taken under the head house property as LOP, and their annual value will be taxable. Calculate the annual value as per 23(1). This is your LOP. Even if the property is held as, the rental income of that property by actually letting out the property will not go to PGBP. It has to come to house property head. Will you remember this? Everyone? Everyone? Now see, rental income of such property shall not be taxable under the head PGBP. Rather, this property will be treated as LOP, and as per 23(1), the annual value of this property will be taxable in the hands of the assessee, having this property as stock in trade. Now sometimes what happens, no? The property you are holding as stock in trade, but you are not actually letting out the properties. Did you actually let out the property? No. So here, even if the property can earn rent, even if property has a rent earning capacity, the property can earn rent also. But are you exploiting the rent earning capacity and earning the rent? So the government says that here section 23(5) will be applicable. What will be applicable? 23(5) says that the GAV, meaning the annual value, meaning the rent earning capacity, we will not tax you. We will exempt it. But we will exempt it for a period up to from the end of the financial year in which the certificate of completion of construction is issued. For 2 years, we will exempt the annual value. So keep the property in your stock. Don't give it on rent. Even if the property is having a rent earning capacity, even if the property can earn rent, that rent earning capacity, that annual value we are not going to charge for 2 years. 2 years from the end of the financial year in which the completion certificate was issued. See, whenever you construct a property, no, you have to take the permission of the corporation. So corporation gives you permission to commence the construction. You have to, give the blueprints, you will have to give the entire, what do you call, drawings to the corporation, that this type of building I want to construct on this land. Kindly give the permission to construct this building. So all the submissions will be done by you. They will check whether your drawings, whether the type of building which you want to construct, property which you want to construct, is according to the guidelines, according to the rules of the corporation or not. If they find it okay, they pass your drawing and they give you a certificate known as commencement of construction. Then only you can start the construction. And once the construction is done, then you will have to again go and apply to the corporation, saying that as per the past drawings we have constructed, please come and check that whether we have constructed as per the given permission or not. The people from corporation will come. They will say, okay, this drawing was approved, as per this drawing only he has constructed. Okay, now completion certificate also they will issue. Completion certificate is issued. For example, completion certificate issued in previous year 24, 25. In my previous year, the completion certificate was issued. What is the previous year, guys? Previous year 24, 25. In this previous year, completion certificate was issued. So they are saying that from the end of the financial year in which the completion certificate was issued, from the end of this financial year, how many more years? 2 years. So completion certificate can be issued on 31st July 2000 and meaning in previous year 24, the completion certificate was issued. From the end of this financial year for 2 years, can I say till 31st March 2027, the annual value of this property will be exempt. But remember, during this period, if you let out the property, during this period, then the property is treated as LOP only, no? But if you don't let out the property, you keep the property as what? Stock in trade, not exploiting the rent earning capacity, then at the most we can give you the exemption for the year of completion of construction, and after that year for 2 more years. Yes or no? Within this time, definitely if the property is stock in trade, within this time the property will be sold. But what if after 31st March 2027, still the property is there in your stock in trade? Possible, not possible? Will you get any exemption now? Now the annual value will be taxable as if the property is let out, deemed to be let out. Getting my point, everyone? Hello, sir. So tell me, previous year 24-25, annual value will be taxable or will not be taxable? The year in which the construction is completed, in that year forget about the taxability. That year also, and after the completion of that year for another 2 years. So 25-26 also annual value will be exempt, and 26-27 also the annual value will be. This is enough time to sell your stock in trade, and we have given you ample amount of time because your stock in trade is not a normal item. Stock in trade is house property. Usually it takes more time to sell what? The stock in trade properties. Yes or no? So if you are able to sell it within this time, then there is no problem. Keep it as a stock which you are holding to be sold, and within this time sell. We will not charge any tax on the annual value during this period. But if this period is also over and now still you are having the property, so can I say with effect from previous year 27-28, now the annual value will be exempt or will not be exempt? Now the annual value will be as if the property is deemed to be let out. Got it, sir? This was your 23, 5. Everyone understood this? Now see, if the above period of 2 years is over and the property is still held as, GAV will be as if the property is let out, meaning as DLOP. Example, please check. Construction completed in, for us it will be previous year 24-25. But right now take this example. Previous year 24-25, construction completed. Will there be any GAV taxable for this year? This year also GAV is exempt. And after this year, 1 and 2 years. 1 and, meaning previous year 25-26, and then after that 2 more years, the GAV will be exempt. Got it, sir? And after that 28-29 onwards, the GAV will be if the property is still held as. But wait, within this period or afterwards also, if the property is actually let out, then the property will be LOP and the annual value will be taxable. and the amount cannot be taxed under the head PGBP because your business is not to earn such rental income. Getting my point? Understood? Clearly understood? Very good. So this was your 23.5. Now 23.5, once we have completed 23.5, after this what we are going to do? We are going to discuss about properties situated outside India. Okay, no? But before that, a small discussion I want to do with you. Pay attention. See, if there is an assessee, assessee is having properties. Assessee is having these properties are acquired for business. Acquired for? What is the business of the assessee? Buying and selling the property. Constructing and selling the property? No. Assessee's business is not to buy and sell the properties. Assessee is in some other business. What is the business of the assessee? For example, manufacturing these fans. So I am in the business of manufacturing. So to manufacturing these fans, I need a factory. Hello. So I constructed a factory, I bought a factory, I bought a property. Getting my point? So now can I say that property which I have acquired for my business? Do I have a property? Yes. Am I the owner of that property? Yes. Hello. And I am using that property for my own business, or will this property be classified under the head house property or will not be classified? So this property will not come under the head house property. Yes or no? Sure? My business is to buy and sell the property. And the property is held as? That is a different case. And right now, the case which I told you is a different case. Even if you hold the property as stock in trade. Number one, do you have a property? Yes. Are you the owner of the property? Yes. Are you using that property for your business? No. Use is not happening. It is your stock. This property is not used in your business. This property itself is your stock. Then the earlier discussion was applicable. Getting my point? But now my example has changed. My business is not to buy and sell the property. My business is not to construct and sell the property. For me, the property which I am buying is not a stock in trade. This property acquired for business, this property, my dear friend, is not my stock in trade. This is not my. This is an asset which is used in my business. This is the. So, will this property be brought under the head house property? Property acquired for business, not held as. Meaning the property is used for business. This type of property will not come under the head house property. This will be directly going to PGBP head. Did you understand this? Sure. Everything about this property will be dealt under the head house property. Sorry, PGBP. Got it? Easy? Now another example. See, the first thing was different, stock in trade. This is what is, I have explained. This is also different. Now color, red color. because my example is changing. So I'm changing the colors also. Okay. So now please pay attention. If there is one assessee, okay, what this assessee is having? This assessee is having property which he has acquired for business of letting out properties on rent. Bloody, my business is not manufacturing the fans. Now my business itself is the giving of property on rent and earning the rental income. Now tell me, will I have different properties at different locations? Yes or no? Am I doing any manufacturing or other business in that property? No. I am having these properties to give the property on rent. And giving the property on rent and earning the rental income is my business. Possible, not possible? So tell me, this property which is giving me rental income, will this property, this is my business, no? Business of letting out properties on rent. Now, if I will let out these properties on rent, will I earn rental income? Tell me. Now my question is, this rental income will be classified under the head house property or it will be classified under the head? Did you understand the question? Tell me. It will be classified under the head if properties are residential properties. So even if my business is giving the properties on rent, will not make any difference